I'm Peter Janowsky from Ryan and Janowsky Financial Strategies Group. This is another episode of Financial Strategies for Seniors. And today my guest is Karen Tenenbaum from Tenenbaum Law. Karen, thanks for coming on.
Thanks so much for having me.
You are a tax attorney?
Yes, I'm a CPA and an attorney.
A CPA and attorney,
And
okay.
I handle, help resolve tax problems with the IRS in New York State.
And hopefully anyone who's listening to this will learn how to avoid the problems and not come to you with problems. But however, if they do have problems, they can certainly come to you. How did you get into this? And if you're a CPA, why are you practicing law now?
Yeah, so I went to college and took a 4-year accounting degree, and I had a professor who was a lawyer, and he said, everybody in this room should be both. So I said, okay, I never thought of it before, I'll do that.
Okay.
I also grew up in a family business where everyone sat around the dining room table and the kitchen table and spoke about business. So I always knew that I'd be helping small businesses.
Okay.
So now I help small businesses and individuals. Anytime the IRS or New York State contacts them, that they're either having an audit or they're having a collection issue, they owe money, and we help do planning, and we help when there's an issue.
What kind of family business?
My parents are, my father is an electrical contractor, and my mother was always a bookkeeper for a business as well, and so my brothers are now in that business, and I knew I would never go into that business, and it seemed, perfect for me to be both a CPA and an attorney. I have an LLM in tax, and I've always done that. I said I can't be all things to all people at all times. What am I good at? And I'm good at negotiating with the government, and so here I am helping businesses, and we're one of the top tax law firms according to Long Island Business News.
Fantastic. Yeah. So you didn't want to go into the electrical business. So shockingly, you went into something else.
What's so funny is that I always say, here I am, the daughter of an electrician, but if you ask me to plug something in or how it works, I have no clue.
No clue.
No clue.
Okay.
And so I picked the right profession.
And you grew up in New York?
Yeah, Long Island.
Okay.
Yeah.
So he was a Long Island contractor.
Bayswater, Queens, and Lawrence, Long Island.
Okay.
Yeah.
Fantastic. So you don't practice accounting.
No, I don't prepare tax returns.
Okay.
I started out at the Big 8 accounting firm, so I'm dating myself. I started out at Deloitte, and then I went to Mean Herdman, which eventually merged with Peat Marwick and now is KPMG. So I did get certified. You needed 2 years of public experience at that time. And then I went to Long Island law firms. I was working in the World Trade Center, and actually we would have been a direct hit. I think the plane hit the 99th floor of the North Tower. We were the 101st floor of the North Tower in the tax department. But in 1993, when there was a bomb in the basement of the World Trade Center, Deloitte moved out. But I was also long gone. I started a family. I didn't want to commute anymore to the city, and so it worked out great that I went to Long Island law firms. And I went to Ruskin, Moscow, Evans, and Faltachek at the time. Now it's Ruskin, Moscow, Faltachek. And I went to Farrell Fritz, and I raised my family, and I was doing I was actually doing a little of everything. I did estate planning at the time, tax consequences of corporate deals and real estate deals, and also tax controversy work. And then about 25 years ago, I said I was bringing in so much business, I could do this on my own. And I started my own practice, and I just celebrated 25 years.
Congratulations.
Thank you.
And here we are. See, I'm glad because I did not know this about you. I did not know that you did estate planning. I didn't know that you really did start off in the accounting field. So you're almost like a perfect package for seniors and their families.
It gives me an interesting perspective and a unique perspective that not every other attorney has.
Right, and that is you're right. It is unique and it's rare. And I do know that in our profession, we end up working with sideways with accountants, attorneys, financial advisors when people do need help, and there's a lot of back and forth. So it definitely adds value to what you do when you already know what's going on, and there's less questions, I suppose. You have a little bit more knowledgeable, which helps, cuts the process. And specifically with seniors now, all right, there is concerns, especially on my end, with financial planning for seniors because of change. And like I've been saying, like on my website right now, I just wrote about how to expect the unexpected. There's always change in life. And like I was saying in some other previous conversations recently, that no matter how hard you plan, no matter how well you plan, something changes. It's the unexpected. So given that fact, like when I'm working with seniors right now, what we're real up against is hot topic is inflation, seniors on a fixed income. And guess what? Taxes, because taxes are always changing. You get it. And there's always decisions to be made after an event. Unfortunately, there's unforeseen deaths, divorce, so on, and we'll get into that with the unexpected. Should I pay quarterly? What happens if I forget to pay? So all this we're going to circle back to, but the first question is, what should a senior or the families or caregivers be most concerned with now is with taxes?
So it's interesting because, as I mentioned earlier, I do a lot with people who are being audited or people who owe money. So I can tell you some of the stories that have come up recently. We handle a lot of residency audits. People who claim that they live in Florida and New York State says you live here. And why does that matter? New York State taxes you on your worldwide income, no matter where it's derived. And so if you claim that you've now moved, there are different consequences, right? So there's a state,
let's back up for a
there's
second.
income tax and a state tax.
Let's go back. Worldwide income.
Right, wherever you earn your money, it doesn't matter where it's coming from. New York State is taxing you if you are domiciled here or if you're taxed as a resident here. So let me actually let me define what that even means. Okay, New York State taxes you if you're domiciled, meaning you have a permanent, I'm sorry, that's the statutory residency rules. You're domiciled here, you've always lived here. Home is where the heart is. Home is where you intend to remain. But they also tax you as a statutory resident, which is you have a permanent place of abode here for substantially all of the year, and you're here more than 183 days. So everyone says, 6 months in a day. I was in Florida 6 months in a day. I don't have to worry about being taxed in New York. That's what you hear when you're on the golf course or when you're playing mahjong. But that's not. But that's not the rule.
Right.
I once got a call from my mother. This is very funny. She says, I'm sitting at the mahjong table. Is it true? And then she goes through that whole thing. I said, Ma, this is what I do for a living for 40 years. That's just not the rule. If you were once living in New York and you're trying to move out, you have the burden by clear and convincing evidence, and it's a tough burden, to prove that you've changed your domicile before you even get to this day count rule. And so not everybody knows that. And what we see regularly is somebody will buy a place, they'll renovate it, maybe they'll spend a little time there. A few years later,
You mean out of New York?
Out of New York, and it's not just Florida, it's Texas. We use Florida as it's a pretty common example, but you move out and you start making changes to the place, and you spend a little more time every year, and then one day you say, okay, now I'm here. Yeah, but what really changed? That was a creeping change. New York State says, we don't really think anything has changed. Your pattern of life is, you still have activities going on in New York. You still have a house here. You still have other, family members, whatever here. And now you have it there. What has really changed? And there's a famous case where they said, if you have contacts here and contacts there, you have to have some clear mark of when things have changed. When did you change? Did you get married? Did you get divorced? Did you get a new job? Did you retire? Did you get sick? What happened that really changed? And so we handle a lot of these in the planning stage, and then we also handle them in the audit stage. And we're seeing this a lot because of COVID. So how many people normally you go October till May, let's say in Florida. Now what happens when, because of COVID, you couldn't come back?
Right.
And so, right, it's a big issue. And we actually had a case recently where, exactly as I described, in 2014, the gentleman bought, he lives on Long Island. He bought a place in Florida in 2014. In 2015, he renovated, hired a decorator, everything was wonderful. 2016, he brought his art collection and his wine collection to Florida. I think he even changed the insurance policy, which is a key thing. 2017, he did whatever he did. And in 2018, New York State came in, audited him, and sent him a bill for $250,000. He said, what are you talking about? I'm not here, I'm there. Well, during COVID, he was not able to come back to New York. So we were able to negotiate with New York and get that change of domicile. And why is that important? We were just discussing worldwide income because we're focusing on the income tax. But now, when you change your domicile, it's changed for estate tax purposes as well. So now your entire estate is not taxed in New York, which is significant. So you have to plan for all of this in advance. We have another gentleman who was selling his business. He knew he was going to have a big capital gain, so he said, you know what, I'm going to move out. So the year before the sale, he moved. He thought he, quote, moved to Florida, but he didn't do everything you're supposed to do. Again, everyone walks around thinking, 6 months in a day, I changed my driver's license, I changed my voter registration, but that's not enough.
Let's back up for a second. Yeah. So do you offer services, I'm really going left and right now, but do you offer services for consultation like a pre-plan?
Sure,
Or I mean, it's
sure.
like, because obviously, I mean, not obviously, but it seems like because you're working with audits, and it seems like most of the work you do is when it's too late. But do you ever get people to consult with you before it's too late and way ahead of time as like a strategist?
Absolutely. We do a lot of planning.
Okay.
So if you're planning a move, I would say you come to us, even a year or two in advance and set everything up. Because New York State's going to look at a number of factors to change your domicile. They're going to look at where your home. They're going to do a comparison. New York, and I keep using Florida. Size, how you use it. Are you going to a full-time job on a regular basis from the New York home? That's not going to be in your favor. Have you now joined and have social events going on in the other location? They're going to look at your business involvement day to day. Do they need your signature? Do they need your decision making on everything that goes on in the New York business? They're going to look at your time, but it's not the 183-day rule. They're going to look at a comparison, as I mentioned, from what you did before to now. Is there a change? Let's say you were always spending time, maybe a month or two in Florida, or 6 months. Now are you spending more time in Florida? And they're going to look, a 2-to-1 ratio is probably a good ratio. They're going to look at your items near and dear. They call this the teddy bear rule. Where do you keep your dog, your pet? And then they're going to look at family connections. Where do the minor children go to school? And a lot of those things are you're capable of handling, of controlling those. Then they do look at those other factors, your driver's license and your insurance policies and your voter registration and where you actually vote. So those come into play, but everyone thinks it's the second. And we've written an article that's in a National Journal of Taxation magazine about these issues, because if you speak to an estate planning attorney in Florida, for example, they might not know the New York rules. So
actually, I just want to cut in for a second. So you obviously don't get involved with the actual estate planning. You're not going to come up with trusts for people, so on and so forth. So let's just say someone has done that already. Or let's say they have a very typical situation. Let's say they have a place in Florida. Maybe they have the very typical revocable trust in Florida, or they have an irrevocable trust here, and they're doing the Medicaid planning and all that. Did you ever come across a situation where that stuff has to be changed or moved around because of a change in their life for tax purposes? Well,
again, you have the burden of proof when you're going to eventually get audited. So what are you going to bring forward? You might want to have something that says, I live in Florida, right? Wouldn't it be great to have your will saying, I live in Florida, or your trust saying, I live in Florida? It would be lovely to be consistent. To the extent you're not consistent, they're going to say, what's this all about? So you gotta look at those things, because everyone thinks it's an easy case to win, but they're gonna subpoena your cell phones. They're gonna. I always say they're gonna, look up your like a colonoscopy. They look up your rear end with a microscope.
Sounds like an episode of NCIS. They're going everywhere.
They go everywhere. Go everywhere.
All right. So that's something.
And they look at your credit cards, and they look at everything.
Right. Wow, I had no idea.
Yeah.
This is pretty good information, because I had no idea.
It's pretty
But
intense.
you're right. It's a lot more important than what you hear at the Mahjong game, because I come across that too. With all the type of strategies that I put into place for people and all the planning I do. And I do have a large audience. My clients range from, 20-somethings in retirement plans to seniors. And you'd be surprised how many times, I heard on the radio that the S&P never loses money. I'm like, hey, it's whatever. I go through the same thing. But and we're going to circle back and forth.
Yeah.
Audits, right? So before we talk about how you work and repair situations, can you give any advice on how to prevent audits? Is there such a thing?
So, we've been talking about residency audits. There are also other things like sales tax audits. So we represent a lot of small businesses, local businesses that get audited on a regular basis from New York State. And we really have to have the proper books and records, because the state's pretty aggressive. And what they do is they take a look at a small segment. They usually do a 3-year audit, but they usually pick a period where they're going to look at every invoice and make sure that you charge the proper sales tax. And then they're going to apply that over the 3-year period. And you'd be surprised how when you multiply it by that many months, the number grows. So you want to have proper books and records if you're in a business. If you're an individual, again, it depends on what it is you're looking for. If you usually you get a proper representative to prepare your tax returns, and there are statistics about what's reasonable in every category.
Right.
So you want to take a look at that, although the data is a few years old.
Is there any typical red flag these days? Not a business, but a personal situation. Is there like a typical, the don't do's. Don't do A, B, C because you will get audited.
Right. So I am an accountant, but I don't prepare tax returns, so I don't give advice on that.
Okay, got it. I understand that part.
Yeah.
So let's go stay on the audit for a second. All right, because I'm going to bring part audit plus change. All right, and again, my theme lately has been the how to expect the unexpected, and life is always changing. Death, divorce, things like that.
COVID. Let's talk about that.
COVID, right.
So many people are working remotely these days. Talk about the change that New York State has actually said, if you once, let's say you lived in Connecticut, you're a non-resident of New York, you lived in Connecticut and you used to come to your employer's office in New York State, you were taxed in New York State by, on your wages there. New York State said nothing has changed even though you're not working in New York State. Even though you're working remotely, you're in your mother's basement in Connecticut, and your office was closed, there was no ability for you to even come in. New York State has frequently asked questions and says nothing has changed unless you meet one of the exceptions that you have a bona fide employer location. And there's some planning that goes on there as well. You have to meet a number of factors. Bona fide means
like outside New York State.
Well,
otherwise,
yes, exactly.
Right.
That Connecticut is really your home, and so New York State came out with, as I mentioned,
like if a company has multiple locations, then they're okay.
Well, this is not just multiple locations. This is saying your home is one of those locations, or that one of these. Maybe you rent an office and you get a legitimate lease, and the company's now going to pay that lease. And maybe you're going to, I don't know who has landlines. Maybe you have a landline at the office there, and maybe you changed your business card, and you have to show. You have to meet one of the. It's a number of factors that. I'm not going to go into.
Okay, and just going back to how you work, because of COVID and because of change in life, do you work in other states? I mean, obviously you help people in New York State, but what if?
So I do federal work. So I do anything relating to the IRS, but I only handle New York State for audits and collection.
And so if somebody moves out of state, then you're passing it to someone else. And
it depends on the type of matter. So anyone who moved to Florida, I handle it because it's a New York State matter. But let's just go back to the COVID situation, because New York State sent out over 150,000 notices. Normally they do a field audit on these residency matters. Here they're doing almost a desk audit.
Field audit, I'm lost. Field audit,
right,
desk audit.
I'll tell you, I'll describe in a minute. But so for the desk audit, they're just sending out a letter and saying, we think you didn't properly pay taxes to New York State. And so they don't normally do that. So a field audit is, pre-COVID, they would say, we're coming to your office, or we were coming to your house, and we want to look at all this documentation, and there's a specific person assigned to your matter, and you work back and forth giving them documentation and then negotiating a settlement. A field audit, you get a letter, again, to 150,000 people. I think what they're trying to do is figure out there should be a field audit of at this point, so that
right. Like a filter.
Right, exactly.
Okay,
exactly.
Got it. A sieve. Okay, filter. So you mentioned negotiate. So I think, and I want to circle back to the whole senior thing, because I really want to focus on how, what problems seniors have with audits and taxes and so on and so forth. And you get to the point where I know in a situation right now, the client I'm working with, there was a death in this situation, and this person, very typical, one spouse really didn't know what was going on, from what the other spouse was handling all the finances. We're not really sure if taxes were paid in a year or two.
So I have a perfect example of this situation. So we represented somebody, I think the husband had dementia, passed away, and the wife also had some medical issues and passed away, and there was a tremendous tax liability, and there was a tremendous estate. The daughter took money out of the account, and the IRS was going after her and said the parents didn't file the proper tax returns, and if they did, to the extent they did, they owe a tremendous amount of money. And so you can't take that money. We're coming after you. We're going to put a lien on your house. She lives locally.
Wow.
She said, oh my God. I called up the IRS. I said, look, this is again, it was actually the beginning of COVID. I said, isn't it easier for you to get a check? Here's what we're going to do. There's something called a first-time penalty abatement. Now, while they were alive, they probably could have done an offer in compromise if they had filed proper tax returns, and there was a tremendous...
First time, meaning like this is the first time they did something where the authorities had to come in, and the IRS in this instance, there's no history.
Right. We're combining two things. If while they were alive, they could have done an offer in compromise, which is saying, we can never pay this full amount. We want to pay something less. That's what you hear on the radio, 10 cents on the dollar kind of ads. Okay, so while they were alive, they could have done an offer in compromise, but they didn't. So now, after the fact, we could have said, we want a first-time penalty abatement. So if they didn't have, if they didn't do anything, if penalty wasn't removed in the last 3 years, you get the first-time penalty abated for the first year. You go back 3 years.
If the penalty wasn't removed.
Right. If it had not previously been removed.
Meaning paid.
Paid. No. If it had not been taken off. If you didn't use this once before.
Okay, I got it.
It's the first time you're using it.
The first time you're using it. Get out of jail free card.
That's right. First time, but you have to ask for it. The IRS doesn't just automatically do this, and New York State doesn't have this. So you have to know about it and ask for it. Otherwise, you have to write, you can put on your 8th grade writing cap and write a creative letter requesting penalties to be abated for reasonable cause. So what we did in this situation is I said, isn't it better to get a check? Give me a first-time penalty abatement for the husband and the wife. And we wrote the reasonable cause letter. They had dementia. We attached all the documentation showing the sicknesses, hospital records. Everything got removed. Something like $250,000 got removed. And then what was left? Nothing, almost a little bit. And she wrote a check.
Oh, my gosh.
Yep.
And you obviously, you're the person who negotiates directly with the IRS.
That's exactly what we do.
Yeah, I think most people aren't aware that they can negotiate if they get into trouble.
So I'll tell you another situation. The IRS in New York State are very aggressive these days with collection action. They could take money out of your bank account. They could take money out of your salary. And sometimes, let's say it's a business and it's payroll day and it's Friday, you really want to contact them and say, you know what, don't take my money. Maybe it's trust fund taxes, meaning you owe them personally. You're going to eventually owe them personally. They were the withholding taxes, the Social Security taxes that were taken out of the employee's salary, and it's not your money, or the sales tax, that's not your money. It's trust funds for the government. And so what happens is they're about to take money out of the company's bank account or your personal bank account. You call them up or you contact them to the extent they answer the phones these days, and you say, don't put us out of business. How are we going to ever pay you? So why don't we do this? Why don't we give you some down now and we'll have an installment agreement. We'll pay you over time. It's really an opportunity to come forward. And if they're taking money out of your salary, wage garnishment, New York State takes 10% of the gross wages, but the IRS takes almost the whole thing and leaves you with little to live on. They go based on a chart, and you can't live on it. So again, it's an opportunity to come forward and say, we got to work something else out.
Right. And most of the time, I'm assuming they are willing to be flexible and work.
Depends on who you get. Sometimes the person on the other end is not as negotiable, and sometimes they are.
Okay.
Now, we're also seeing that they're very aggressive with collection action these days. So if you owe more than $55,000 to the IRS, they could take away your passport. If you owe $10,000 or more to New York State, they could take away your driver's license. You need a license to drive. Right?
Ooh,
you need a car to get around on Long Island. And so we're seeing a lot of this. New York State and the IRS were more lenient for the last year and a half, but now they're back. They're back. So you got to open those envelopes, see how much you owe, and contact them. You have to be proactive. Otherwise, you're going to have some issues.
Gee.
So we had a case where, 2 cases. One where we represent someone who's has an international business. It's a little embarrassing to say to your clients that are in another country, I can't get on the plane. I owe money to the IRS. And we know somebody who goes on vacation every year. The same thing. How do you tell your friends and relatives, I can't get on that plane, I owe them money? And these are doctors, lawyers, Indian chiefs. I mean, these are well-respected people.
Yeah.
And sometimes they just get into a hard place. And so, we were able to come up with a resolution and got everyone on the plane.
Yeah, that's a great metaphor. Actually, I just want to come back to something. You mentioned something. I lost my train of thought because I got to be honest with you.
I always interrupt.
No, it's all right. I'm really surprised how people actually get into these situations. So going back to the audit situation, because I want to be clear with anyone who's watching. And I know you don't do the accounting work, but if an audit is occurring, do you get into the mechanical part of the audit as well? Do you go through the books?
Sure.
Oh, you do?
Sure.
Okay.
So if you're talking about an individual income tax return or, audit?
Yeah, in any capacity.
we represent.
So, I'm thinking, I want to be clear. It's like, I'm thinking you're the attorney, you're just negotiating. Hey, well, listen, you got to go to an accountant and redo this, or give me an example.
Yeah, the second you get a notice that you're being audited, you need a representative, okay? And you need someone who knows the rules. So again, if it's income tax, you want someone who's going to look at every line item and know what's proper and what's not proper. And you want to have a discussion with your taxpayer and find out what may be not 100%. Sometimes they don't fully disclose what's going on. Is there unreported income? Are there other bank accounts that we don't know about? There's something going on. Why are you being audited? Right. What was the red flag? We asked them, what was the red flag?
Right. I know we couldn't really talk about that, but
they usually know what's going on.
Right.
There's some kind of transaction that maybe they used their business as a personal bank account almost, and took money out and didn't properly charge it to themselves as income. There are a lot of things that go on, and we look at everything. Was there a big transaction, a capital gain? Was it properly called a capital gain? Did someone else think it's ordinary income?
What you're talking about really is not so much hiding anything, but improper reporting.
Possibly,
okay.
Or just the government is just looking at it because something is out of whack.
And also, so like I deal a lot with clients where we're beginning stages, middle stages, it's done estate planning, and trusts are involved, and trusts have to pay for certain things, and there's a lot of confusion at times where, well, can the trust pay my taxes? Can the trust pay, the part of the house I'm working on? Can the trust pay for my yacht? Can the trust pay for the apples I bought at the grocery?
Exactly.
So obviously that's a whole other story. But my question is, as long as someone keeps a track record and could show a good, clear trail, is that a safe, comforting thing for someone? Like, hey, listen, you know what? Here's the check went to A, to B, to C, to D. So if you go all the way back, the IRS is not going to have a problem because they see where it went to the penny, and you're fine. So keeping good records is paramount.
It's all about documentation.
Right, so we're winding down, and I just have one last question, if there is. Do you see a lot of scams? Do people come to you and say, hey, listen, I got this letter from the state, the IRS, is this real?
People question that all the time, and including the professionals, the accountants and the attorneys. Sometimes you have to prove that you really are the representative, or that you really are who you are. They just changed the rules actually because of
You
that.
mean from the government?
Yeah.
Right.
Yeah, you get a letter from the government. Is it real? Exactly.
Right, because I know, we tell seniors and caregivers all the time, if it's a phone call, it's not real. But still, sometimes, I've heard stories recently now where there's scams in paper, letters, and unfortunately it's working. We're winding down, so before we wrap this up, please tell everybody how they can reach you, phone number, website.
Sure. So you could go to litaxattorney.com. You could always call us at 631-465-5000. And you could always email me. I'm Karen Tenenbaum, KTENENBAUM at litaxattorney.com. We also have an app that you could download for free, Tax Helpline.
Oh, that's fantastic. And obviously, if people can't remember your number, they could always call me, Peter Janowsky, 516-719-6396. I can't thank you enough. I learned so much today. It was wonderful. And I'll close the show by saying what I try to always hope I get this right is, whether you need the help or not, may the hand of a friend always be near. Thank you very much for watching.
Thanks so much. This was great.